Assalamualaikum warahmatullahi wabarakatuh. We are from Group 8 and we will be presenting our group assignment report made on the application of MFRS 141 in BATU KAWAN BERHAD and PLS Plantations BERHAD. I will be starting off this presentation with the company background for BATU KAWAN BERHAD. BATU KAWAN BERHAD was founded in December 1965 and was listed on the main market of the Malaysian Stock Exchange Bursa since October 1971. It is an investment holding company which has its principal activities structured into four notable segments, which are plantation, manufacturing, property development, and investment holding. So plantation, which is mainly carried out by Kuala Lumpur Kepong Berhad, involves the cultivation of oil palm and rubber estates, harvesting and processing the fresh fruit bunches FFB into crude palm oil and palm kernel. Besides palm cultivation and palm oil mills, the group, through its refineries and kernel crushing plants, processes its crude palm oil and palm kernel into higher value palm-based products, which are then sold in the domestic and international markets. Next, I'll be moving on to the background for PLS Plantations Berhad. It is a Malaysia-based investment holding company founded in 1987 that is engaged in civil engineering and construction works. The company segments include plantation, trading, construction, and investment holding. The plantation segment is engaged in the management and operation of forest plantation, logging, sawmilling, chipping, and other downstream manufacturing and related activities, and operation of oil palm plantation, and management, operation, maintenance, and harvesting of durian plantations, including contract farming and in other durian-related businesses. So PLS has a total plantation area of 11,000 hectares and 730 hectares for oil palm and durian respectively.
For PLS Plantations BERHAD, based on notes on basis of preparation on biological assets, fair value of biological assets is determined by independent professional valuer. In measuring the fair value of fresh fruit bunches and durian, market price, production quantity, maturity, processing costs, and other direct costs estimation are required. According to Notes 3K on financial statements, biological assets are measured at fair value less cost to sell. Biological assets are classified under current asset before being sold in period not more than 12 months after the reporting date. Then, the balance are classified under non-current assets. Based on Notes 14, biological assets on Acacia and Karas, the income method is based on the cash flows generated from the harvesting activities and some other conditions and factors. On the other hand, biological assets of fresh fruit bunches prior to harvest, the present value of the net cash flows expected to be generated from the sale of FFB represent the fair value. For valuation purposes, the quantity of unripe FFB on barrel plants of up to 15 days prior to harvest was used. The prices of the unripe FFB was based on recent market price of the FFB.
Moving on to the initial recognition for BATU KAWAN BERHAD from Note 3.68 Agriculture Produce from notes to the financial statements. Here it says, management has deliberated on the oil content of such unharvested FFB and concluded that since the oil content of unharvested FFB accrues exponentially only from 15 days prior to harvest, such unharvested FFB more than 15 days prior to harvest are excluded from valuation as their fair values are considered negligible. Therefore, quantity of unharvested FFB up to 15 days prior to harvest is used for valuation purpose. Fair value of unharvested FFB is determined based on market approach, which takes into consideration the market prices of FFB and crude palm oil, where appropriate, adjusted to the estimated oil content of unharvested FFB, less harvesting, transport, and other costs to sell. Next, on initial and subsequent measurement from Note 3.6 Biological Assets. Firstly, agriculture produce growing on barrel plants of the group comprises fresh fruit bunches, or FFB, prior to harvest and are measured at fair value less cost to sell under biological assets. Any gains or losses arising from changes in fair value less cost to sell are recognized within cost of sales in profit or loss. Next, growing crops are measured at fair value, which is based on the costs incurred to the end of the reporting period for these crops. Livestock is measured fair value less point of sale cost, with any change therein recognized in profit or loss. Fair value is based on the market price of livestock of similar age, breed, and genetic makeup. Lastly is on BATU KAWAN BERHAD's fair value determination from Note 24 Biological Assets. The fair value of the group's biological assets, which are estimated using unobservable inputs, is categorized within Level 3 of the fair value hierarchy, with the exception of livestock, which are on Level 2 basis. Fair value assessments have been completed consistently using the same valuation techniques.
Lastly, we look at the comparison and conclusion from the analysis of both companies. The comparison are based on three key analyses, which are level of information presented, level of fair value hierarchy used, and fresh fruit bunches. For the level of information, both companies include the formula used in calculating their biological asset and the accounting treatment related. However, for PLS Plantation Berhad, more information are provided to the users, such as the method used by the valuer to get the fair value. For Acacia and Karas in note 14b1, it is stated that the fair value for Acacia and Karas were estimated by management through use of a registered valuer using the comparison and income method in arriving at the fair value. So it is mentioned in their statement a brief explanation of what is the comparison method and income method and their estimation. Also included for PLS Plantation Berhad, the sensitivity analysis for Acacia, Karas and fresh fruit bunches prior to harvest. The sensitivity analysis indicates the approximate change in the group's fair value of mentioned biological asset that would arise if the key estimates and assumptions on selling price adopted in the valuation model had changed at the reporting date, assuming all other estimates, assumptions and other variables remain constant. Except for Eucalyptus, Meranti and Durian, there are no sensitivity analysis because it is deemed by the management to be insignificant to the company. Next, the level of fair value hierarchy. For both companies, their biological assets mainly are on level 3, where the fair value are estimated by the company. However, for Batu Kawan Berhad, there are assets which are on level 2 of fair value hierarchy. Stated in note 36b, the livestocks are on level 2 basis, whereby the inputs are observable indirectly, thus the fair value is based on the market price of livestock of similar age, breed and genetic makeup. Lastly, the fresh fruit bunches. Both companies produce fresh fruit bunches and are included in the financial statements as stated in note 36A for Batu Kawan Berhad and note 14B4 for PLS Plantation Berhad. The fair values were calculated using the same method of fair value less cost to sell off the produce, and the difference are recognized within cost of sales in profit or loss. Both companies' management assumed that the net cash flows to be generated from FFB is based on its 15 days harvest interval, and therefore the quantity of unharvested FFB on barrel plants of up to 15 days prior to harvest was used for valuation purposes. Both companies' fair value of unharvested FFB is determined based on market approach, which takes into consideration the market prices of FFB and crude palm oil, where appropriate, adjusted to the estimated oil content of unharvested FFB, less cost to sell, which include the harvesting, transport and other costs. The only difference is that PLS Plantation Berhad provides sensitivity analysis.
And that concludes the presentation from our group. Thank you.